tax credits. They are a gift that the government is giving you.
The lower you get your income, the more that frees up in deductions and credits.
That's in the Christmas spirit, in my opinion.
We hope that you can actually see the value in these gifts the government wants to give you, but will you receive them?
That's pretty powerful.
One of my favorite credits also, too, is the R&D.
There are so many, literally hundreds of tax credits out there that if you aren't aware of them, you're just saying, no, government, I don't want the gifts you're offering. And tax credits are a beautiful thing. Welcome to this episode of the Hidden Money Podcast. Kevin and I are anxiously preparing for Christmas with our children. His 3 and my 3. It is an exciting time of the year. We're trying to teach our kids it's all about the gifts of giving, not receiving. It's harder for the younger ones. My 2-year-old's not getting it. The 6-year-old's almost there. The 8-year-old halfway gets it. But on the idea and the concept of gifts, Kevin and I can't help but think about tax credits. They are a gift that the government is giving you as long as you're making sure you're eligible for them and you're doing what you need to do to get them. So this whole episode is going to be on the concept of tax credits. And tax credits are a beautiful thing. They're so much more valuable than a tax deduction. Let's go over the basics of that real quick. A tax credit is a dollar for dollar reduction of your taxes. A tax deduction just lowers your taxable income. So to figure out the value of a tax deduction, you got to multiply your tax rate by the dollar value of the deduction. To figure out the tax credit value, it is the credit. It's going to lower your taxes by that amount. Doesn't matter what your tax bracket is. There's differences with tax credits too, right, Kevin?
Yeah, and from a math standpoint, like if you're given $1,000 deduction and $1,000 credit, the $1,000 deduction, if you're in the highest bracket, it's going to save you $370 in tax. The $1,000 credit saves you $1,000. Now, there are differences also in the tax credits, whether they're refundable and non-refundable. Most credits are non-refundable. There's very few that are refundable, but what that means is a non-refundable credit means it can get your tax to zero, but not more. The government's not going to pay you for that. Instead, those credits typically carry forward. What a refundable credit is you can get your taxes to zero, and then that credit can keep pushing you negative, and the government's going to pay you. There's actual refundable credits out there too.
Not a lot, but there are some out there.
Yeah. And a lot of these credits come with income phase out limits, which just means if you make over, let's say $250,000 as a marrying filing couple, you could be eliminated from all credits, especially the college credits. I know a lot of my clients who are high income earners, they have kids in college. They're paying for college. They have all the qualified education expenses. They have room, board, tuition, books, everything that qualifies for college credits. But because they make too much money, it's too bad, so sad.
But that phase out, that threshold is based generally on your adjusted gross income. Sometimes it's a modified adjusted gross income. But tax planning lowers your AGI. So you can have people making literally millions a year who've done good tax strategy and plan their taxes, lowering their AGI to below $200,000 in that case, or whatever the cutoff is, $150,000, and eligible for all of these credits. That's pretty powerful. That's in the Christmas spirit, in my opinion.
Where you can buy, even if you're a high income earner, you could buy that short-term rental. You can invest into that oil and gas deal. You can do those two simple things, and that lowers your AGI. So you're investing into appreciating assets, something that's going to be kicking off income. It's lowering your income. The lower you get your income, the more that frees up in deductions and credits.
Yeah.
So it's a two-edged sword. It's great.
This episode's about tax credits, but it also works. You mentioned wealthier families or middle class families that most people call us wealthy, right? But we're in the middle class. Student loans and student tuition deductions or student tuition help, right? FAFSA applications. if you can also lower your AGI on your taxes before your kids are going to school, as you start your FISA applications to get them there, you might find out you're owed a lot of help with tuition on your kids. So that's another big benefit of tax planning.
Yeah. Let's just get our income as low as possible.
Heck yeah.
Absolutely.
Our taxable income.
Taxable income.
Yes.
Yeah, and one of my favorite stories is, we had back, I don't know, it was probably 7 years ago, we were working together, and one of our clients adopted two children, two boys, and Mike and I have a heart for kids. I got a young baby now, and you got 3 and I got 3, so we know about the kids and the struggles that come with it. But these two boys, I mean, they were in bad shape. Like, and our clients came in, like, they would just sit in soiled diapers for hours and hours and hours, and so they had a heart to adopt them. Well, they did, and they adopted them prior to us even being clients of ours. And so we're like,
it's not like these guys were really wealthy.
No.
I mean, these guys, they were called to do it, and it didn't matter what it cost. And they rated their life savings, they rated retirement accounts
to adopt these kids.
And then they came and met with us like, man, I need help on taxes. We're hurting for cash this year. And then they explained what happened with the adoption, and Kevin speaks up and says, "Hey,
you just like, and just having, it's like when you meet with the CPA, it's almost like an attorney. You need to let us know everything, and just saying, yeah, we adopted 2 kids a year ago, and then all of a sudden it's like, ding, something clicks, and you're like, can I see your return for last year? Can I see your return, your most current return? I just want to see." There were no adoption credits. If you adopt somebody, if any child in the United States, domestic adoption, there's different rules for international. They're generally the same amounts, but you can get up to $15,000 to $16,000 a credit.
that's a credit, not deduction.
Reduction of your tax liability per child, and that's your agency. You just tab up, account for your agency costs, your legal costs. All of adopting children is expensive. It is very expensive. 16 grand, probably not even a lot to get through this whole
minimum
process.
50.
Yeah.
And that's going on the cheap.
But this helps.
Yeah.
And so that was something we were able to do, amend a return, slap these credits on there, and it was like a $30,000 refund for something that they were going to do anyway.
Well, they'd already done it.
And they already did. And they got a huge refund, and the government paid them for doing the adoption. And they had the income threshold. They met all the qualifying things. And so adoption credits are a thing. If you are out there and you have adopted a child, or you're going to adopt a child, that is a good and right thing. But also there's good tax benefits to it.
Yeah. Well, let's talk about some other credits too. Although we love that one. It's near and dear to our hearts. This year is the last year. This December 2025 is the last year that some of the energy credits are available. It's too late to buy an electric vehicle. Those credits went away September 30th. That gift was taken away from us by Congress in the One Big Beautiful Bill Act. But any expenditures up through the end of December, as long as it's placed in service or you're utilizing it, you take delivery of it, put a Tesla Powerwall at your house. 30% tax credit. Energy efficiency, home energy efficiency improvement credits are still good until December 31st, 2025. Those are nice ones. But it's also, some of those energy efficiency improvements include putting on new windows, new water heater, upgraded HVAC. Most of those are going away again. So do it now. Do it this year.
Solar panels. And you've done that.
I did that.
What's been your experience on that? Would you do it again? I know the tax benefits were good, so you got a really good tax benefit.
Yeah, I got a 25-year payment plan at 0.9% APR interest, so it's paying for it. But I didn't follow my own advice. I let the tax tail wag my investment dog here. I wanted as many panels on my house as I could. And unfortunately, the way my house is created and structured, the south-facing part of the roof had the most crud on it where you couldn't put that many panels on it. Where the north-facing roof, I got 3 times the amount of panels. I mean, I put as many panels as I could fit on my roof, right? And the solar sales guy was like, oh, yeah, that'll help. I mean, you won't get as good efficiency on the back. But the ones I put on the south, they are easily paying for themselves. The one on the north, I'm not going to break even until like 12 years into it. But our energy bill is a lot cheaper. I just replaced it with a monthly payment for the solar panels. Would I do it again? Yes, but I would have done it differently. I would have built an entire wall that faces the south in my backyard and put all 51 of the panels I bought on that south facing, and it would have generated 100% of my electricity and my neighbor's electricity. In Texas, we can't. It's also, we have this rule: the 1-for-1 buyback is not legislated yet. So it wasn't the greatest investment, but at least the government paid for a third of it, right? That was nice.
Yeah, that is nice. And you got to finance. So how much did you put down on them?
Nothing.
And they were installed in December,
They were installed in December. So I literally only paid 1 month's payments, was like under $200. I got a credit, over $30,000 in a credit.
So you paid $200 to get a $30,000 credit, which was good.
But
now we got to actually analyze. This is a good example because so many people jump into some sort of investment to save taxes. They might want to buy that car, buy whatever to reduce their taxes, but then it's good in that year. But then you're stuck with this payment. But you said you would do it again, as energy costs. Yeah, you would just kind of structure it differently.
I mean, and still, it's going to pay for it itself. It's just going to take longer because I got south-facing panels.
Does that improve the value of the house? Is it resale?
Some realtors think so, some don't. I guess it depends who's buying the house. Is solar important to them, or is it not? Right?
Yeah.
But yeah, what I really could have done is, so I got 51 panels. If I would have had 29 panels south facing, that would have covered 100% of our electricity. And then for less than I actually paid for this, I could have put a few power walls in and been completely energy independent. You still have to tie into the grid here in the city that I live in, but I would have been able to, power could have been out for a month and it wouldn't have bothered to phase us a bit.
Cool.
And it would have been a little less than what I spent now. So I would learn more about it, but it was also September. We were in tax planning season. I wanted to get that credit. I needed that credit that year. So
you got it.
I got the credit.
It worked. You saved $30,000 in tax. So the solar credits, all those EVs. So we always want to look at like administration changes.
Yes.
When we had Democrats and now we got Republicans in office, the Democrats were very pro green energy, the EV and the solar credits and everything like that. Well, this administration's kind of like, we're going to kind of lean into oil. We're going to lean into natural resources. They don't really believe as much. And so you can kind of follow the administration changes and the tax law changes and you can kind of see where they're headed.
Yeah.
So it's very interesting.
Yeah.
From that standpoint too.
It is interesting. But there's still a ton of credits available. There's more credits. Well, let's talk about some more for the non-business owners. The education credits. There's two of them, right? The lifetime learning and the American Opportunity Credit. Both of those are there if you have a student that's in college, or if you're going to college, or if you're getting a different degree. You're an adult and you're going to get a different degree. There's one for you there, and that's actually partially refundable. But again, most of our clients and most of the people that really need to do tax planning aren't going to get refundable credits because they're paying a lot in taxes already, but you can lower your taxes a lot. So just make sure you're aware of those credits. Where's some other credits, Kevin?
Yeah, and those, I always love the college credits because we're paying for our kids. Our kids are going to college, most of them. I don't know, my thinking on college is changing, but I'm saving for it. We'll see if my kids want to do it. I'm like, is it really necessary as much as it was? But I'm going to be paying those expenses, and then I could tax plan like we were talking about to get under that threshold and actually be eligible for the credits. And we do that with clients too. When there used to be a phase out of your Schedule A. So if you made a certain amount of income, your Schedule A, your itemized deductions, your property tax, your charity, your mortgage interest, and medical expenses, you would get a phase down of your deductions there. So you actually see a multiplier on your tax planning if you can get your AGI as low as possible, because it was to where we could free up our itemized deductions. We'd be eligible for these credits, things like that. One of my favorite credits also too is the R&D. And we're actually doing an R&D study now. I haven't involved you yet, but I'm doing it on the back end. It's a lot of work.
It is a lot of work.
It's a lot of work. But here's the R&D credit.
I want to see, once you're done figuring this out and getting us this tax credit, which we're eligible for, and I've always thought we were, but I just didn't think we were. I want to see how many hours you put into it versus your hourly bill rate, and see if it was really that great of an idea revenue wise. But at least, I mean, with Kevin as my partner at the firm, I absolutely know Revo Taxpayer Advocacy is going to pay the least amount that we're legally obligated to pay. We're not going to pay a penny over. We're going to get every single credit that we have available.
That's possible. Yeah. And when people think R&D, they think, I got to develop an app. I got to do this, that. It doesn't have to be in the tech sectors.
No.
Tech sector. As not a CPA firm, but as a tax strategy company, we are eligible for R&D because we are constantly, you and I are constantly workshopping ideas, products, new ways to change the marketplace of how we view taxes.
Yeah.
And so I met with an R&D specialist like, hey, this is what we do. We don't just put numbers on a tax return. There is a lot of process. There's a lot of trial. There's a lot of error. There's a lot of research,
improvement,
a process improvement, everything.
Yes.
And some of it works. Some of it, we're workshopping it before we come out to the public with stuff, right? Like we have a new strategy that we're taking out, but we're also getting opinions on it because Mike comes up with these wild harebrained ideas on the tax side, and I'm like, that's a good idea. I have some concerns. So we got to vet these tax strategies
and not all
and
of
ideas.
them play out.
Yeah.
Yeah.
And so that is R&D. That is your time, your energy, developing, creating something new that isn't out there. That is capturable credits.
Does that mean you're going to give me a raise now?
Yeah, sure.
Nice.
If I can get this through, sure.
Okay.
But the R&D credit's going to be kind of a disruptor because now these specialists, they're going to come in and interview our staff for like 30 minutes each. And now's a good time to do it. But they're going to say, hey, tell me your job, and they're kind of just digging around saying how much of their time is eligible. So what we do is in an R&D credit study, what you're going to do is get all of your costs associated with the R&D activity. And our costs are mainly personnel. It's wages, it's that kind of overhead. It's like we're not developing a tangible product, it's all intellectual. So they're going to have to interview our staff, interview us, and just say, what is it you do? Tell us about this product. And so how much of their salary can be allocated towards their normal job? How much of their salary is allocated to R&D type work? That R&D type work, that is eligible for credits to where we're going to get a dollar for dollar credit on our taxes. Last year, this year, and even next year, like we're going to go 3 years. And once we do the initial work, I think it could just play out to where we can get some sort of process in the future. But
yeah,
they're eligible. You don't have to develop a tangible product. Think about your business. What are you doing to change your process? What are you doing to change the marketplace, change the way you deliver anything? Just have that conversation.
Yeah, my favorite thing about that credit, the R&D credit, is it is so underutilized. I would guess probably less than 5% of the American taxpayers that are eligible for the R&D tax credit actually take it. And it is worth it if you're spending.
It's now with the One Big Beautiful Bill.
Oh, heck yeah, it is now because One Big Beautiful Bill, there's something that changed back starting, I think, in 21 or 22. We weren't allowed. We were the only country, the first world country in the globe that wasn't allowed to deduct research and development expenses. But to be eligible for the R&D credit, you got to be tracking that you have R&D expenses, qualified research expenditures. Well, suddenly, because we couldn't deduct it, one, businesses didn't want to spend as much in research because it was hurting their bottom line. I mean, it hurt their cash flow big time when you can't deduct it. Two, if you're documenting that you have all this research and development, now you don't get to deduct it. Well, finally, in the One Big Beautiful Bill Act, they brought back, I mean, it was just asinine that it wasn't available anyways, but that's back. But that's not the only credit. I don't want this to be the R&D tax credit. We have a couple podcasts on it. We'll put those in the show notes. If you want to learn more about the R&D tax credit, go to those. I think that the overall message I want to share on this podcast episode is there are so many, literally hundreds of tax credits out there that if you aren't aware of them, you're just saying, no, government, I don't want the gifts you're offering. Like we've got some this year that thankfully we know tax law that a lot of people wouldn't think about. We instituted an improved health insurance plan for our employees. We've
Savers credits.
We also we provide maternity leave now and paternity leave for all our employees as a small business. There's a credit for that. There's the WOTC credits, and those are huge, the work opportunity tax credits. If you hire people in any kind of economically distressed area, or what the government considers people that need help finding jobs, like veterans, or people that were on government assistance for a while, or people that have been in prison and are now coming out and trying to find a meaningful working life. You get those, you hire those kind of people, there's nice credits available for it. And a lot of people don't realize that they are eligible for it already. And that's probably maybe 25%, if that, of the public that is eligible for those credits get them. What are some others?
Those are a lot.
Tips credit for restaurant
Yeah.
people. I mean, how many people miss that credit if you're operating a restaurant in the service industry, in the food service industry?
The child tax credit, which is going to
Hey,
have to be
that's nice
adjusted
now.
for inflation now.
Yeah, it's back $2,000 thanks to the One Big Beautiful Bill Act. $2,000 per child, adjusted for inflation after this year.
But those have income thresholds.
They do.
So tax plan, because you got to
have
get your income down. So if you can get your income down, let's say all of these credits you're eligible for, you get your income down. Let's say you have 3 kids, that's $6,000. Let's say two are in college, that could be $1,000 each there
Yeah.
too, or more. That could be $2,500 each
Let's
with
say you're
$1,000
taking care of your
refundable.
mother-in-law. There's $500 credit right there if you get your income.
So now we're not talking just, hey, I got my income tax to 0. I got refundable credits. I got normal credits. It's like, man, you got to start developing this plan to start stockpiling these deductions on the front end. Get your AGI low. What credits am I eligible for? And let's implement and do
That's
it.
part of the important thing of tax planning, right? So tax deductions cost you money. If you're in the highest tax bracket, they cost you 3 times as much as they're reducing your taxes generally. So you want to plan for the deductions at your highest tax brackets. But once you get down below these thresholds for the credits, stop taking the deductions. Lay them off a year. Do the next year and use them next year when you're back in the high bracket. But use tax credits to eliminate the rest. So get your income down to $240,000. You're still going to pay tax, but then get enough tax credits to where you don't.
Absolutely. Yeah.
And maybe even throw in a couple refundable ones where for once, the government pays you more than you paid it this year.
Yeah. Those are always nice. That's
Those are
kind of
nice.
like a really nice gift that you
Yes.
didn't expect.
Yes.
So do your research. I mean, AI is a great component. You could start there and say, hey, give me the top 10 credits. Here's my income. Here's my situation. Do that. Or talk to us. We can help you there too. AI is good. It's just not quite there yet. But that's where you could start. You could just look at what credits are out there and then get a professional in your corner to help implement and get tax plan and get your AGI low. So thanks for joining us on this episode. We hope you learned something. We hope that you can actually see the value in these gifts the government wants to give you, but will you receive them?
Just continue to watch the show and you'll get good, valuable insight, valuable tax saving opportunities each and every time. And as Kevin mentioned, if you don't have a tax planning professional in your corner, you can find us at revotaxpayer.com.